We're now crossing over to the Renaissance Capital floor, where Grant Nader is standing by to give us an update on market performance into today's session. Grant, great to have you on the program. Thanks so much for watching. And we know that we've also been seeing quite a bit of positivity on the local bourse. 33,424 points is where the JSE All Share ended at. So that new all-time high on the closing front. Should we get optimistic about this number, Grant?
Well, Eleni, it does look like it. If you look at it purely from a technical point of view, the market does seem to be breaking higher. If we hold these levels, we could well test those previous highs from a year or two ago.
With regards to where you see the market headed from here onwards, some say that we could actually see between a 15 to 20% return into 2012. Do you think that is highly optimistic, given the fact that we're starting to see a bit of stabilization on a global front, even when it comes to the debt scenario relative to the economic numbers that we've been seeing? It seems that there's more optimism heading into the year.
You would have to say that there really is a lot more optimism. There's a lot more people looking for buying opportunities into the market. The mood is positive. The underlying feel of the market is positive. And this is all despite the fact that there's no real resolution coming out of Europe or Greece. The market really has got an extremely bullish undertone, taking those factors into account. And yes, we could well see a positive first half of the year. You know, I would hesitate to call beyond that, and 20% may be over-optimistic, but I wouldn't be surprised if we have a very bullish 6 months of the first half of the year.
Grant, with regards to some of the news flow coming through into today's session, Woolworths out with a trading update, expects headline earnings per share to increase by around 35% or up to 35%. This is a fantastic number. It's in double-digit territory, far above many expectations. Are you also quite surprised by this high number?
Yes, it was a good number. Our forecasts were only slightly lower than that, so it wasn't massively above expectations. However, it was a very, very solid number at the top end of most forecasts. Really, this Woolworths has turned themselves around, and they go from strength to strength. So it has really been a favourite of the foreigners and the locals, and it looks to continue to do so, and it's delivering on those expectations.
Would you say that Woolies is a buy right now, given that all the food retailers, and we know that Woolies is not only playing in the food space, we've seen quite a big rally on the share price front. Does this warrant, though, these strong numbers, does it warrant to buy into the share price right now, into the stock right now?
That is a tricky question. On a relative valuation compared to our international peers, there still does seem to be value on Woolies. On a local front, these valuations are starting to look fairly stretched, even with these good numbers. But the momentum is very strong, and the price action looks very strong. So it wouldn't surprise me to see a fair bit more upside from here.
With regards to Clicks, also Clicks coming out with some interesting numbers into today's session. But one point of weakness is, of course, Musica. We've spoken to the CEO, David Neal, numerous times over the past few years. Still no exit strategy when it comes to Musica. What is your sense? Do you think that it's time now for the company to let go of this business?
It really has been an albatross on their back, hasn't it? And I think they're looking for an opportunity. I just don't think the right opportunity has presented itself. Give them half a chance. I think they'd like to part with this business. Having said that, despite the fact that they've got poor performer there, the overall business is performing really well, and there seems to be good growth coming through in the rest of the business. So overall, still very positive.
Interesting. With regards to the sales up till January, we saw a 4.9% increase to around 5.3 billion rand. Were you happy with this? I mean, it's in single digits. We've seen some of the other retailers performing far better than Clicks.
Yeah, well, they do operate in a different sector, and they also have a very good expansion and rollout sort of strategy looking forward. So it does still look like a good prospect, even though it perhaps doesn't have the same growth numbers as some of the others.
With regards to Richemont, Richemont out with some numbers yesterday and really beating expectations. Asia Pacific really being one of those key sectors to look at going forward. Richemont has also had a very strong share price performance, even in South Africa. Do you think that it's still a buy?
I think once again on a momentum play, I think Richemont could well be a buy here. The strength out of Asia seems to have no end in sight, and given that there's now talk of further stimulus coming out of the Chinese government, the GDP numbers were still fairly robust this morning. The production numbers were good, so I think those numbers could go from strength to strength, and I do believe Richemont could offer value even at these levels.
Grant, we know the resource sector is trading at an overall PEV around 8 or 9. It's actually offering quite a bit of value relative to the other sectors on the JSE. platinum has really been underperforming. Would platinum now be a buy? Do you think that we could actually see a bit of positivity within this sector?
Eleni, I think given that, given how it has underperformed, if we do see some sustained uprun in this market, you probably find that platinum has the most gearing in terms of unrealized upside and the most potential to outperform on the upside. So there could be value there. We saw great numbers. The platinum price is looking very good at the moment, and Implats, for example, was up 4.5% today, being the top performer on the market.
With regards to the overall market sentiment, Fitch coming out and warning that Greece is going to default. We had S&P downgrading 9 Eurozone countries. We had a good economic data, as you alluded to, from China today. Do you think that overall it's going to be a better year from a macroeconomic perspective?
We certainly hope so. And even if it isn't a better year from a macro point of view, one certainly has to look at the fact that a lot of that noise is in the price. You can see by the reaction to the downgrades on Friday, the market has priced in a lot of this already. So I guess there's less room for bad news at the moment because a lot of it is already in the market. So there potentially is a good year ahead of us.